2 weeks, we've added 2,000 points to the DAX, and now we're at 12,726. So a little bit of profit taking may be understandable.
Yeah, and you've got some analysts now saying actually it's time to look at European equities more closely, Barclays, for example. So some do see the rally continuing. So, look, we've mentioned the stock market indexes this morning, but let's also talk to you about the bond markets, because also we have the ECB's Christine Lagarde appearing before European lawmakers today. So in terms of German yields, negative 28 basis points, that's where they trade right now. 92 basis points for the US benchmark yield, so up by 2 basis points. The other big story that we should mention in the oil markets, of course, is that Brent crude up above $42 a barrel, 42.89, so climbing 1.4% after the OPEC Plus agreement over the weekend that I'm sure we'll talk about in the show too. And WTI crude futures also at $40, pretty much on the nose, up by 1.2%. And just also in the FX markets, good to note that the Bloomberg Dollar Spot Index continues to weaken, down 0.25%. The pound rallies 0.1%, 126.85, and the euro currently trading at 113.03, so also stronger, 0.1%. So that's a little summary of the markets for you, just as US futures, I should say, are still positive this morning, Matt.
Now, speaking of FX, let's bring in right now Peter Kinsella. He's the global head of FX strategy at Union Bancaire Privé. And Peter, just talking about the rally that we've seen in equity indexes the last few weeks, the last couple of months, makes me think about the rally that we were watching in the euro. It's back right now to, what is it, 113, and on Friday it was at 113.84. Do you think this common currency has continued strength ahead, and why?
Right, hi, Matt. Look, I think that the broad euro dollar up move we've seen since sort of April or thereabouts, or even sort of early May, is mainly a reflection of dollar weakness. It's not really idiosyncratic euro appreciation to any large extent. So no, it's one thing to expect the European currency to rally. I think it has, in part it has because one of the things that the ECB did was that they removed the tail risk of a sovereign debt crisis or an Italian debt crisis, basically with its extension of the PEPP program. And that's definitely led to a very large contraction in Italian spreads, and consequently you've seen markets sort of price out any sort of extreme risk averse event in Europe. So Euro traded higher on that, probably in a small short covering move. That said, I think the ECB will not want to see an aggressive appreciation of the euro, particularly in a weak international environment. The last thing they need is a much higher euro. However, they may well actually just end up getting that, because certainly what we tend to find during the global economic recovery is that the dollar tends to weaken, and it tends to weaken a lot. Right? We saw that in 2010. We saw that after the dot-com sort of crash in 2001. And I think the stars are aligning for a similar move this time. So I'm afraid that we're probably likely to see continued grind higher in euro dollar. Not an aggressive up move, but a grind higher is definitely doable in my opinion.
So then on the flip side, tell me more about the US dollar perspective, because obviously that is a bet on the fact that economic recovery may happen more quickly in the US. How did you look at the US jobs data on Friday? I mean, it was abysmal, but it was better than expected. So the dollar dropping this morning, an 8th session in a row, longest losing streak since 2011?
Yeah, it's impressive. I mean, look, I think on the jobs data, there are far better people than me to analyze the data. But the fact of the matter is that U.S. jobs data, particularly in an aggressive recovery, they're very, very difficult to predict. The only thing we can get from or glean from the data is that we're seeing a two-speed recovery in the States, which is what we saw elsewhere in China. Basically, manufacturing sector is getting back to work, and the services sector is still but with a lag. So what that basically tells us is that growth is going to go in the right direction. We've likely seen the trough in terms of GDP contractions, both in the States and elsewhere. And from here, really, we can anticipate a reasonable recovery. You've seen the Fed doing everything they can. You're going to see a very, very large fiscal stimulus from the government. We are in an election year, of course, and they always spend money then. So I'm reasonably confident that we're going to get a pretty robust recovery. In fact, by December of this year, I wouldn't be surprised if we saw the U.S. unemployment rate well below 10%. So you will see an aggressive recovery both in this year and next. But what that means to the dollar is that it should tend to sell off, because certainly who needs to hold the dollar on a safe haven basis when the world is improving? And in that context, I can easily see the dollar dropping by between 3 and 5% on trade-weighted basis over the next year.
Okay.
All right, Peter, thanks so much for joining us. Peter Kinsella joining us on TV and on radio today. He is the global head of FX strategy at Union Bancaire Privé.
Yeah, look, I think it's well worth noting also that pound bears perhaps are returning. The worries about Brexit are also playing into the market. So the pound at 126.83. But that's for the FX story. Let's also talk about the other big news that may be coming. Of course, the two big drug makers, most prominent perhaps in the response to COVID-19 and the pandemic, are talking about possibly combining in the future. That's AstraZeneca and Gilead. Well, for more on this top story, we're joined by Bloomberg's executive deals editor, Aaron Kirchfield. Thank you so much for joining us, Aaron. What can you tell us then about this approach? How serious do you think it is at the moment?
So we think it was indeed a preliminary approach, probably at a very high level. But the fact is, this would be the biggest healthcare deal of all time. So I imagine even if you just float the idea, you will have put some thought into it, because it would be a transformative deal for Astra and Gilead.
I got to ask about, the word merger is thrown around. When I first started here at Bloomberg, that was when Daimler was buying Chrysler, and they called it a merger of equals. The PR people love that term, but it never really is the case. And even on our MA Go function, we break these things down into target and acquirer. So is this AstraZeneca going to Gilead and saying, we want to buy you?
I think you're absolutely right. It is hard to do a merger of equals. It probably doesn't exist. But all you need to do is look at the market caps. Astra is something like 140 billion. Gilead's at 95, 96 billion. So just based on that, the UK firm would be the acquirer. That said, I think you would pitch it as a merger, especially if you were to explore something like an all-stock deal, to show this is friendly. We want to combine our different strengths. But you're right, it's somewhat of a communications exercise. So at the end of the day, I think the Astra shareholders would be the majority owner if this goes ahead. And if is a really big question because it's very early days.
Driving force for the deal, then, what would be in it? It's obviously not COVID-19. The companies are kind of trying to look beyond the pandemic, right?
That's absolutely right. I think you have to think longer term about what the strategic rationale would be. Big pharma deals are all about getting scale, about bolstering your firepower for R&D. I think one analyst put it at something like $9 billion plus would make them the number 2 in terms of R&D budget. So that would indeed be something appealing. And I think more than anything, if you look back historically, the biggest pharma players all were created through mergers. This would put the combined company well above 200 billion market cap, so it would get you really big scale. And yes, Astra has had a lot of progress under the CEO, Pascal, in terms of building up its R&D pipeline, and the strong shares reflect that. But Gilead has a history, even if they've had a bit of a rougher ride recently, of quite innovative treatments for HIV, hepatitis C, etc. So it would add maybe some promising drugs to the longer-term pipeline as well.
All right, Aaron, great to get you with us a little bit here on radio. I know you're very busy today. Aaron Kirchfield is the executive deals editor here at Bloomberg. Fantastic scoop by John Lauerman, Susie Ring, and the venerable Ed Hammond on the Bloomberg terminal over the weekend. Let's get over to Leanne Gerrans right now with your World National News. Leanne?
Matt, good morning and thank you. New York City is lifting its curfew as protests remained mostly peaceful over the weekend. This comes as the city prepares for life after the coronavirus lockdown. And in a radical move, Minneapolis City Council has promised to begin the process of dismantling its police force. Minneapolis was where the protests began after the death of George Floyd. City Council members say they will consult the community on how to replace the police force. Now, here in Britain, Boris Johnson Johnson says anti-racism protests have been, quote, subverted by thuggery. The Prime Minister has tweeted after mostly peaceful demonstrations in London yesterday ended in scuffles. Meanwhile, in Bristol, police say they are working to identify who was behind the toppling of a statue of a famous 17th century slave trader. The Home Secretary, Priti Patel, has condemned the behaviour of those protesters.
Sheer vandalism and disorder completely is unacceptable, and it's right actually the police follow up on that.
New Zealand will remove social distancing requirements after reporting 0 active coronavirus cases. Bloomberg's Matthew Brockett says this indicates it's achieved its aim of eliminating the virus.
Prime Minister Jacinda Ardern said on Monday that all remaining restrictions on people and businesses, other than strict border controls to keep the virus out, will be lifted at midnight tonight. The South Pacific nation earlier reported that the last of its coronavirus patients has recovered, making it one of the few countries in the world to have successfully eradicated the pathogen, and the first among those that suffered a sizable outbreak. In Wellington, Matthew Brockett, Bloomberg Daybreak Europe.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit hud.gov/fairhousing. That's hud.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Take the Bond Challenge. Use the free Interactive Brokers Bond Scanner to search their deep availability of U.S. government securities, 38,000 global corporate bonds, and 850,000 municipals. IBKR passes through the highest of all bids and lowest of all offers received at the electronic venues it accesses. We do not widen spreads, apply hidden fees, or mark up quotes. How many basis points does your current broker keep? Find out at ibkr.com/bonds.
When you went car shopping, you meant business. You aced vehicle history searches and test drives. You out-salesman to the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
Influential conversations from Bloomberg Television. Here's Tom McKenzie on Bloomberg Markets.
Hong Kong's government is promoting a message of stability, in particular for its currency peg, unbroken since the 1980s, as the territory charts a course to revive its flagging economy. Bloomberg spoke to Hong Kong's Financial Secretary Paul Chan about when he sees a recovery.
This year, I think towards the second half of the year, particularly in the fourth quarter, this is hopeful. But this is very much depend not just on ourselves, but number one, the coronavirus situation globally. Because if globally this is under control, then a lot of economic activities can be revived. And secondly, the relationship between the US and China, particularly on the trade front, that would affect our foreign trade. And also thirdly, at the moment, when we get the coronavirus situation under control and the society back to a stable environment, we are going to encourage our own consumption. Say, for example, the $10,000 scheme for every eligible Hong Kong citizen.
Hear more interviews like this one on Bloomberg Television, streaming live on Bloomberg.com and on the Bloomberg mobile app, or check your local cable listings.
Markets, headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app and on QuickTake by Bloomberg. This is a Bloomberg Business Flash.
Good morning from Bloomberg's World Headquarters in New York City. I'm Anne-Marie Harder with this Bloomberg Radio Business Flash. We are seeing European equities to the downside this morning. FTSE, DAX, and CAC all with red arrows. Europe's benchmark index, the Stoxx 600, down 0.6%, led lower by technology and consumer shares this morning. Comes as U.S. equity futures are also fluctuating. We are in the green at the moment, but we have seen some fluctuation throughout the session overnight. It's been a hot few weeks, of course, for equities. Investors now maybe taking some stock. What's the next big catalyst? Everyone this week will be focused on the Fed policy meeting, and that brings me to the bond market this morning. U.S. 10-year yield up 1.7 basis points, spot 9.1%. Lots to talk about the steepening of the yield curve and the questions regarding yield curve control. Is that the next tool of the Fed? The dollar, the index this morning, the Bloomberg Dollar Index down 0.3%, weakening, heading towards the longest losing streak since 2011. Euro dollar 1.13, and cable this morning 1.26. We are seeing the pound and the euro trade higher against the U.S. dollar. Oil this morning, Brent crude, $42.79. At one point, we were touching through 43. Historic output cuts were extended over the weekend. This morning, keep a lookout. Russia and Saudi oil ministers will be holding a joint press conference later this morning. And I just want to quickly end with iron ore on the Singapore contract. Trading above $102. There are supply shocks relating to COVID in Brazil. Many are saying we could see iron ore go even higher. That's a Bloomberg Radio Business Flash. Now here's Leanne Garrett with more what's going on around the world. Good morning, Leanne.
Good morning, Anne-Marie, and thank you. The UK is finalising plans to ease its lockdown. That's as public support for Prime Minister Boris Johnson's response to the outbreak is dropping. 3 polls this weekend showed the gap narrowing between the Conservatives and Labour. Tomorrow, the Prime Minister plans to brief cabinet ministers on the next stage of easing restrictions. President Donald Trump is pulling around 9,500 troops out of Germany, and in another sign of disconnect between Washington and Berlin, Chancellor Angela Merkel was caught off guard. It cuts American forces in Germany by around a quarter. The president has criticized the Merkel government for not meeting its defense spending targets. And China's simmering spat with Australia is deepening, with Beijing issuing a travel warning saying discrimination against Asian people is on the rise. The Ministry of Culture warns Chinese travellers to be on alert and not go into Australia. The warning follows Canberra's call for an investigation into the origins of the coronavirus and Beijing's decision to put tariffs on some imported Australian goods. Global news 24 hours a day, on air and on QuickTake by Bloomberg, powered by more than 2,700 analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
All right, it is 9:20. Time to check in with Bloomberg Opinion right now. We are joined by Bloomberg Opinion columnist Julian Lee, who's writing about oil following this weekend's OPEC Plus deal to cut production even further. So, Julian, what exactly was this agreement? What are the details?
Well, I think really there are 2 important parts to it. The first is that the group has agreed to extend by 1 month the current level of output cuts. So back in April, they agreed that they would cut a combined 9.7 million barrels a day from agreed baselines. That was in place for May and June, and after that, the volume of cuts would taper, easing back to a 7.7 million cut from the same baseline. What they have agreed to do is to extend that full 9.7 for an additional month. There was some pushback against that early last week, particularly from Russia, but they were brought on side with what was a Saudi proposal. The Saudis had initially perhaps wanted an even longer extension. They compromised on a month. The second thing that they got that I think was equally important was an acceptance by those countries that had failed to make the full amount of their agreed cuts in May, that they would compensate with deeper cuts in the third quarter to make up for the volume that they hadn't removed from the market previously. And that's a